Testing 1 2, testing 1 2. Just doing a little sound check. Hello, hello, hello. We're going to get started here in just a moment. We've got the other stream going. We've got YouTube going. And we're going to jump into this in just a moment. Just getting this chart set up here. We're going to flip over to live here in just a second. Okay, let's go ahead and get the music under control here. Fade this down a little bit. Go ahead and pause that. And we're ready to rock and roll here. Hello and welcome to Market Madness Wednesdays. This is Market Madness Technical Analysis here for August 16th, 2023. And my name is Landy. Welcome to Landy's Crypto Corner. Today we are not going to actually look at the more macro timeframes, but we will look at the medium-term timeframes below the weekly for Bitcoin. We'll look at the daily and lower-term timeframes as well today. We'll jump over, and take a look at traditional markets. We will take a peek at Dixie, gold, and then maybe wrap some things up with some alts at the end. We'll see if there is time today. Now we are going to start out with the Bitcoin support resistance Bollinger Band chart here on the Bitcoin in 60 seconds chart. So if you are not familiar, I do a daily shorts video here on YouTube where I go over Bitcoin's setups for the next day's candle after the daily close in 60 seconds. So you can find that in the Shorts tab under my channel. You can also find the post on Twitter where I am becoming a little bit more active there. And you can find me at CryptoLandy on Twitter. And of course, on all other platforms, it's going to be at Landies with an SCC. All right, so let's jump right into it. Setup here on the daily, pretty straightforward. We got very compressed Bollinger Bands. Bitcoin is trading below this daily support and resistance level, coming in at around that 29.4 to 5. We did see a doji up to and above that resistance up to around the upper second after a nice little bounce off the lower first standard deviation of the Bollinger Bands here. And I did note that if that wick low of that doji was dropped, that we'd likely see Bitcoin trade down to the lower second standard deviation. We have now seen that. So it has swept the lows down here on a closing basis. And if we do see a close below that lower second, which is coming in at around 28.9, then also has price action dropping this wick over here at 28.8, then I would be looking for a move down to the wick lows here at around 28.4 to 6. That'd be this wick low of the current move. And then this last bull candle wick low around 28,600. That would also open up targets down to the weekly here at 28K and possibly more over time upon expansion. Now, when looking at this chart, the upper first standard deviation of the bull bands is right in the middle of that overhead resistance, that being these wick lows over here. So the wick low of the prior range to the doji wick low on the move up, and that's coming in at around that 29.4 to 5 area. That has acted as a deviation zone for price and a rejection zone. So if that area can be reclaimed along with the upper first, we do need to see closures above the upper second, as that would be the next target to the upside here around that 29,700 area, which is just below the close open of this last high. And that does need to be taken out on a closing basis for Bitcoin to really start pushing up towards this weekly at around 30,300. So this close open is coming in at around 29.8. There is a close open over here that's just above $30,000. Those two areas do need to be reclaimed to go test this weekly at 30,300. That would be upside expansion as well. So basically, we dropped the lower second. I'm looking for expansion down to the daily support at 28.4 to 6, and then possibly that weekly, and then reevaluate as there is targets lower at 27.5 to 27.250 on the dailies and 26.750 on that weekly. And to the upside, closures above the upper second that can reclaim this last high and the high just above it at around that 30,000, 29. That would be 29.8 to 30,000, 30,100 area. Then I would be looking for a test up to the weekly. If the weekly is recovered, that would significantly raise my targets over here to around 30,500 to 800 on the closes. There is some wicks up here in and around that 31,000 to 31.5 area where this close open is coming in on the high of the previous range. And then, of course, we can start targeting the daily, weekly, and monthly overhead resistance around that 31.8 again. And that would be pretty aggressive expansion on the daily, but that would lead to what we're going to look at in just a moment, which is the medium-term timeframes below the weekly. And that would lead to expansion on those timeframes as well, likely raising targets up to that 32.4 and more overhead. Now, when looking at the daily from a momentum perspective, we can see that Stochas is pointed to the downside as price has been moving down. I had noted last week that on this move up, Bitcoin didn't make a lot of progress and it lost the previous range lows, likely to turn back down. It has done so. I believe it was already turning during Monday's stream, if I'm remembering correctly. Let's see, this would have been... Yes, so it was already turning an initial cross down on Monday's stream. And it's a downtrend. So it was a bit of a bearish reset on momentum. We can see that BBWP volatility is very low. It is starting to try to line up for a volatility expansion signal. Realistically, probably not going to see that fire off until we get both the BBWP up over the moving average with a positive slope and the moving average with a positive slope. How will that look on the bands? Realistically, above or below the lower second, we'll see the etchings of expansion, but confirmation is gonna of expansion starting would be above the upper second or below the lower second. And because they are right into overhead resistance and underside support, I'd wait for close over close momentum to start picking up before really calling for a major move in said direction, as we could see the lower second or upper second act as initial support or resistance again. So keep that in mind as we go through the time frames here and move up to the 2-day, which is going to be closing today. So we got some medium-term time frame closures all closing with today's daily. That is going to be the 2-day, 3-day, and 4-day. And the Bollinger Band set on the 2-day is showing that lower second standard deviation right there at the daily support level at 28.426. It's actually coming in at around 28.480, so splitting the difference pretty well there. And it will, depending on how Bitcoin closes today, continue with its slow downside trudge here, probably closer to 28.4, maybe 28.3. We'll have to see how the daily or how the 2-day closes today. Of course, that would also be dependent on the daily close. Now, Bitcoin is hanging on to that lower first standard deviation. So we saw that there was a spike down into the lower second and third area of the Bollinger Bands to the downside, right into that support, bounce back to the basis band and slightly above, but holding closes below that basis band on the 2-day. That's the area that does need to be recovered on a 2-day closure. That's coming in at 29.7. Go figure. That is the upper second standard deviation on the 1-day chart. So something to keep in mind. That would then raise our targets to around where the upper first is coming in on the 2-day. And that is the weekly overhead resistance. And that is coming in at 30,315. Basically right on that weekly overhead resistance currently. Now this will shift at today's closure and probably move slightly under it. So I would say if it is under that area and Bitcoin is moving up on the daily, that's going to be a big significant area of overhead resistance, obviously on the closes that I was talking about at 29.8 to 30,100 area. That's likely where we would see the upper first. So if that was recovered on a daily and the 2-day, then we start targeting the 2-day upper second standard deviation as the next big target zone. And that's coming in right now just shy of 30,900. And if Bitcoin does close like this today, I suspect it's going to be around that 30,500 to 800 daily target that I was talking about on the weekly reclaim. So that is lending a lot of confluence to the things that I've been talking about in the Bitcoin in 60 seconds videos and in the prior streams. When looking at the 3-day, we can see that we have very, very tight compression. This is kind of rare. So there's a big move setting up here where the Bollinger Bands second standard deviations here, we can go ahead and measure this with a price range. The second standard, upper second to lower second standard deviation is a 7% range or thereabouts. That is extremely tight compression. We can see BBWP is very, very low over here, 0.8%, and it is still under the moving average, which is at 0.9%, almost 1%. So there is a move coming, a big move coming. And, we're going to see the etchings of that move on expansion to the upside or downside on the daily, but be aware of reversals at support and resistances on the daily before some of these longer term time frames start to actually close and indicate longer term direction. So keep that in mind, please. It's going to be a little bit of a wait, I suspect. But when things start to move, we will get a much clearer picture of that direction. So on the 3 day, I got to tell you, man, this is rare to see bands this compressed. We've seen heavy compression, but it's a rare occurrence. So there is going to be a big move. And as I mentioned in yesterday's Bitcoin in 60 seconds video for today's price action and closures, this is going to compress more. It is around the lower first standard deviation of the Bollinger Bands, trading slightly below it currently, which if it does close below it on the 3 day, that is going to open up intra 3 day price action. So 3 day and under price action targets down to that lower second. And that is coming in right now at 28.4 to 6, depending on which way price moves. The bands will oscillate until we see the next closure, ever so slightly. Now, if we did see that area break down, because this will get another tick and likely compress even further. So this does mean that if we saw closures below the lower second, I would initially be targeting that daily area at the 28.4 to 6 and then the weekly at 28K. We could even see wicks all the way through down to the daily supports underneath at 27.5, 27.250, and then that weekly down there at 26.750. Now, I know I've already said this a few times, but the setup would be that initial volatility likely, if it were to pop down, gets bought back into the bands here. Same for the upside. Initial upside moves probably, even if they start closing above on the daily, probably get rejected and come back inside the bands, and then we reevaluate for continuation of that trend, either to the downside or the upside. And in this case, to the upside, the upper first standard deviation is right there at 30,000, just under 30,500. If we did see closures above there, I would be targeting the upper second to upper third area. That's coming in at 31.1 to around 31.8. So again, everything is lining up with support and resistance. We're likely to see initial, support and initial rejections, so support to the downside, initial rejections to the upside in the time frames below the 3 day. And that would be the expectation. That doesn't mean it's going to be a given. That's why when we do see whatever move starts to develop, just be careful and watch your whether you're using bands, volatility, divergences, and momentum. But remember, it's trend, support and resistance, volatility creates momentum. So understanding that there is an order of operations there, your four key, your core tenets of trading, and again, as many in not just the crypto spaces, but everyone in markets will tell you, the trend is your friend until the end of the trend. I know you've heard this various places. It is true. So now, this 3 day is intriguing, especially when looking at the 4 day, which is going to close with today's daily as well. So the 4 day is lending a lot of confluence to everything that I just said about the daily, 2 day, and 3 day. We can see that the basis band has been hit to the downside here. That is coming in at $29,000. And we can see that the upper first is just above that weekly at around 30,700. So there's the daily upside target on a weekly reclaim of 30,500 to 800 is encompassed in all of these time frames that we're looking at. And then above there, we can see the 31.8 to 32.4 where the upper second standard deviation is coming in. Now this is going to update. All of these are going to update at close today. So we're likely to see this move up and to the right if Bitcoin is trading above the basis band. So we will see that residual 20 simple basis band move up and or go flat. And then we most likely see this as a range on the 4 day here. Now, I do want you to note that the basis area, if it is lost and it does not hold supports, we have just below that weekly at 28K. We have the lower first come in right in between that daily support level area at around 27.5 to 27.250, and then just below it is that weekly support there. So you could even see like a move, if we saw a move down, and then it could get bought back up in between now and the next 4-day closures. And same to the upside. You could see moves above the upper second that go all the way into this overhead resistance and then pull back, maybe even closing back there. Although I would say if we start seeing expansion on the above the upper first of the 2-day, we're likely to see a closure there, as expansion on the daily, 2-day, 3-day are likely to keep things up there for a little bit longer. And then we would evaluate the next close here on the 4-day. So the 4-day is also, so we'll go through some of the pivots here in just a moment, but 4-day Stochastic is headed down, close over close. This would be headed down in the context of an uptrend. So if it does not break the prior low, this is a bit of a bullish reset on momentum. Of course, this also allows for really big moves within this range, including a large chunk of downside that has not been tested just yet, and or it could turn right back to the upside. So the pivot here is going to be 30,740, which again, that's right around that upper first standard deviation. So if we did see closures above there, I suspect that we would start to see Stochastic momentum turn. 3-day is the one to watch now. Between the 2-day and 3-day, in my opinion. The 3-day is at $30,000, so that would be a reclaim of the high side structures that I was talking about on the daily, just above that support resistance area at $30,000 here. The BBWP also extremely low, right? And then the 2-day is still headed up on any closures today above 28.8. So that area was tested today, slightly above there. What was today's wick? Today's wick was 29 or 28 rather, 900 or so. And that is kind of going to be it for Bitcoin. We will follow up, of course, on Friday. 29.5 is going to be the pivot for Stochastic momentum here on the daily. So that overhead daily support resistance area, if that is reclaimed, I would say this is probably going to move down a little bit more. So somewhere around the basis or at 29.4 to the basis band here at 29.3 is likely going to be the updated pivot. So I would say, watch the daily today. Nice bounce off the lower second. If it does close above the lower first, keep an eye on that 29.3 to the overhead resistance at 29.5. If we start to see breakouts above there, these highs can get swung even over here to this rejection off the weekly before the move down that formed this lower range. But, I would start to paint the picture that the daily could start to turn, maintain upside momentum on the 2-day. I suspect that's going to be somewhere around where price is trading right now, 29 to 29.2 on the 2-day pivot. And then that 3-day, very close. It's at 30K. So we could start to see that turn, which would be a bit of a bullish reset in the context of this move up and consolidation. There's an argument to be made that it's a falling channel wedge structure. I don't care, quite honestly, for me in my trading. If that is your thing, just make sure that you are keeping an eye on the important stuff. And I'll say it again and again and again. Trend, support and resistance, volatility that then create and drive momentum. Those are your 4 key factors to trading. And it's not that difficult. It's pretty easy. But don't get locked into a certain view of the market. Just go with the flow. All right, that's going to do it for Bitcoin today. On the higher term timeframes, I'm going to jump over here and show you the swing fail setup from today. And then we'll jump over into traditional markets. But I wanted to kind of keep all the Bitcoin stuff together for today. And in this case, we've gone over the volume areas and why I select specific volume areas. Well, we had a move down and I've been looking for higher volume areas, and then hunting swing fail patterns. Now we have higher volume that built up to a very high volume candle here on this particular low. So this low is at that 29,046 bucks. Very high volume on this candle. Got a nice bounce out of there. And when looking left, the overhead resistance was around the last highest volume candles were these two guys here, these bear candles. This candle set the low over here. So let's go ahead and take a look at that. This higher volume candle right here set this low at around and define this range, and then this was the breakdown candle. So this low was at 29,227, so basically 29,230. You can see that the wick over here wicked into it but held support on a close, and then bounced, found resistance at that basis band, and then we had another bit of high volume come in. This created a nice little range, nice little trading range. We see this higher volume candle. Once we saw a close below, more volume comes in. We then created a new bottom side range. So the way that the swing fail pattern works in this case is when looking at this high volume breakdown candle, we can see where the overhead resistance would be based on the previous high volume candles. So it came right up to this low, which was the most recent higher volume candle before the biggest one here. And then prior to that, we have the low that was set on higher volume over here. So taking these areas is kind of like, it can come over here, likely to reject. If it can reclaim, then we look higher to the next high, and that coincides with this low, so on and so forth. That would be helpful if I use the arrow here. This high coincides with these lows. We have the breakdown to this wick low, breakdown, form a range, and then we see wicks. So these were a little bit higher volume as they were painting on the chart, and closed above this wick low of the highest volume candle that's forming this range here. And we can see that bounced above, got rejected, and this rejection didn't come on the highest bit of volume here, but coming back down and creating this area here. This area tagged again at the lows below this highest volume candle low, and we see that it got bought back up and closed above, so we didn't get continuation, and we bounce up, reject the after rejection at the upper second twice, reject at the upper first, and it comes down, and you'll see that the candle that loses this zone, so we saw support come in here just below this high volume candle, so there is liquidity to be tapped below here. So if we do see this zone between the highest volume candle low and the wicks below it that we're holding on closes, then we are likely to hunt further down. We saw the candle hunt further down, put in much higher volume. That's where the volume comes in, take out a bunch of stops, find liquidity and orders down here as well. And we can see that I have a ray tool horizontal here. We got two candles after that wicked below it but closed above. And then it reclaimed the wick low of this prior swing fail range. Tried to get a rejection there, but closed just above, moved up through it, and it's now testing the top side of the swing fail range in this more consolidation structure. So this is a deviation swing fail to the downside of this range that was being built on the 15-minute, and it looks like it's trying to continue this range for a little while here. That is to say that if we see this swing fail range down here at around that 28,900 area, just above there at 28,19 or 28,20, that we're likely to see things head down and hunt some more orders, which would then result in higher volume. We haven't seen like a big high volume rejection just yet at the highs here, so it's possible that it could continue to try to bounce around here and move up further, and we look for a high volume rejection. That is how we've or how I've explained the swing fail stuff to you guys prior. And in this case today, I decided to, as I was trading, I decided to pop into paper trading here and just kind of show you that the methodology, I wanted to explain the methodology to you and then show you that, you can do this too. So here was the orders and my stop. This is not exact the way that I traded on exchange, as I did my exchange orders first, obviously, but you'll note that I have a position of 5 Bitcoin open on this paper trade, which I do suggest that you paper trade, even if you're actually trading your regular exchange accounts. You can always test out other theories while you have trades running. And if you are a novice or new to trading, you should just be paper trading until you're comfortable. But this was all based on the swing fail setup that I just explained while looking at the candles and the volume nodes. So this is a trade that is 5 Bitcoin. It's right there on the swing fail wick lows. Why is that? Because when evaluating these swing fail areas, I drop down the time frames. You can use a 10-minute, 5-minute, 3-minute, 1 minute, whatever you want to do. And I was monitoring this area right here as volume came in on this 5-minute candle. This is the 5-minute candle that defined this low. And you can see that Bitcoin kept sweeping under this low in the subsequent 5, 10, 15, 20 minutes or so. We had quite a few taps on the next candle when I saw that volume was significantly decreased on the exchange. I, of course, got my actual orders in, and then here on the paper trade, tried to replicate as best I could with that actual area. So got a few orders in, averaged in and around this low side structure on the wicks. You're not always going to get that. That's just luck, to be quite honest, that I managed to get this one to show just on the wicks. On my actual exchange, I was in some closes on my actual orders, but the exchange also went a little bit deeper than the spot price here. So, but this is, just following my rules based on the candle that is setting that higher volume low. And I set my stop just below based on some risk management profile criteria. And that would change if I was going to size up the order and or take profits and move orders, so on and so forth. So, but this is just kind of to show you that, I do practice what I preach here. These orders, you can't manually set these. You can set limits. You can mark it in, mark it out. But this was me marketing here in paper in real time after doing some trades on the exchanges. So I do suggest that you practice this kind of stuff. For instance, if I was paying attention to the trading view chart, probably would have taken a head short here on the trading view chart and then rode this down a little bit further. When looking at some of the lower term time frames as well, we can go ahead and look at something like the 4-hour. This can give us some edge. We do see expansion to the downside, but it's keeling over. So we've got a 4-hour close here in less than 45 minutes. BBWP is under the moving average currently. If it does close, turn the moving average, then we've got some mean reversion, which does mean that that we could still see spikes around the lows. That is still likely, but if it does not get continuation past the now doji wick low and into some of these deeper areas at 28.8 and test those areas, then I would be looking for things to likely try back up a little bit further. And we can check momentum to see if that is supporting our observation. And it is currently at $29,057, $29.60. trading at about 29,100. This would start to paint an initial cross back to the upside with likely initial BBWP cool down. We would need to see a confirmation here. That would likely come at close today, which would be the 8 p.m. Eastern Standard Time, 5 p.m. Pacific Standard Time if you're in the United States close. If this does get an initial cross back up on momentum on this next close, then we look to the daily close to confirm a cross back up and a cool down in volatility as Bitcoin tries to remain above the lower second standard deviations on a 4-hour close. If it does drop that area at $29,000, that would indicate a resumption or resuming expansion to the downside and likely continuation to go test this wick low and lower. Probably down to this next area at 28.8 and under, down to 28.4 to the upside, if we do see the basis on the 4-hour regain, that's around 29,300. That's the basis band on the daily as well. Then I'd be looking for a test back up to 29.4 initially, where the upper first and second are coming in at that overhead resistance, and then come back to it shortly after. All right, that's going to do it for Bitcoin today. If anybody has any questions about that stuff, go ahead and put them in the different chats for YouTube and the custom chat over there for you guys that can't chat in YouTube because you're at work watching YouTube. Let's go ahead and switch over to the daily. Let's go back to this chart here. And let's go look at traditional markets. As I have been hunting for a possible bounce reversal off the lower seconds, if I remember correctly. Let's see if we're getting that. Not yet. There was bounces in the lower term time frames, I suspect. And then down, down, down. Yes, so nice bounce up to test above that lower first into the overhead resistance on the daily for Dow. And it looks like a continuation to the downside. So tested the lows over here, swept that lower first standard deviation. This is continuation of trend on expansion to the downside. So likely going to head down to some of the areas that we've previously talked about down here at the 34,500 area. Yeah, that's going to be my first take on that is 34,500. And as like kind of a big area to watch out for here, 34,400 to 34,500. There is wicks coming in around that 34,600 area. So yeah, closes below the lower second. This is a bit of a bear hammer forming here. So that would likely lead to further downside or continuation to the downside. The daily also indicates that is what's going on here. 35,000 is going to be the pivot to cross things back to the upside here. Currently trading at 34, just under 34,800, coming into the close of the trading session here for New York markets, and head into post-market trading. When looking at something like NASDAQ, it was right. Yeah, there we go. We've been talking about this probable move to the support area, lower second standard deviation. It's just kind of grinding that lower second down here. It's not getting expansion aggressively like Dow in this case. So 14,900 to 14,700. I still am looking for things. It's headed down and almost tested this low at just above that 14,900 here at 14,924. Now, it still has room to come down. I mean, this is a support resistance reclaim, and it hasn't had like a real big retest yet. This would be the real big retest. And I would be looking for things to possibly try to bounce out of this area. If it does lose it, though, there is this this close here just under. If we did see that area lost, around this little wick high. And that's coming in at, we'll split the difference at 14,650. Then I would be looking for things to take a significant leg down to the next big area at this low side structure in the deeper $14,000 area, 14,200s, 14,200 to 400 or so around this structure. So that'd be the next big area. Does momentum support this? Yeah. 15,000 would be the pivot to turn things back up. Of course, that's going to update today. It is in a pretty critical region. I suspect the 2 days getting continuation. That's likely driving this. Yes. So it's kind of pressure down. The 12 hours should be showing the same pivot. Let's go down to the 4 hour here. Yeah, 4 hours fresh down on a momentum cross here. So this is, lower high continuation of trend right into a support area. So this is going to be the big test, I suspect. If it doesn't bounce off the high side after testing down, it does look like continuation to me, though. So 14.9 to 14.7 does look like it is in the cards at the very least. I could be wrong. We could see this close as an inverted hammer and then see it test back up and then try down again. But I think it's getting close to a daily bounce. Whether or not that's going to be a sustained bounce on the longer term time frames remains to be seen. SPY doing the same thing here. It did lose, obviously, that support resistance area a little while ago, but it's in this big support resistance zone. And it is now trading below the lower second standard deviation, indicating expansion. So this would be more aggressive expansion, likely targeting this next low. We've talked about this at 430, 435 to 438. It's right now heading down towards 440. Below there, we're looking down to that 430 to 435 area, this support down here, kind of where this low side structure is coming in. There is a high that was put in right there at 431.73 as well. So a retest of that area. Good. Probably going to bounce on the daily time frames. Whether or not it's going to be a sustained bounce that can take out this downtrending structure remains to be seen. Still pressure down on the 2 day. I suspect, that's going to close today. 454 on the pivot for that. Daily is going to be 441. So, it's trading at 440. It's kind of oscillating around 440. It's 441.96, so 442. That's going to update as well. So, it's likely to either stick around that number or head down to and stick to price as it trades down on the opens. So the open here was 442. It's actually within this candle right now. 440.69, nice, is the lower second. If it can recover above wherever this updates to in the next candle, then we could see a potential bounce on the daily, and then we come back to it later. That's pretty much it for traditional markets. We just follow this on the way down. If we see any macro structure changes, for instance, the last big reclaims of overhead resistance, which would mean that this would be a swing fail, and then a bearish reclaim. That would be a lot of traders trapped, likely take out the lows and then head down much further. That remains to be seen. We're just seeing the etchings of this move. And it's on the daily getting pretty critical. So it's either going to get continuation more aggressively across multiple time frames, or it's going to try for a bounce. Like the 2 day is still right at the lower first standard deviation of the Bollinger Bands, by the way, for SPY. So more likely to bounce than not, but that's not a given. Just keep an eye on it. I would keep an eye on the 4 hours time frames as they're looking like continuation down to supports. So that's going to do it for traditional markets. Let's go ahead and take a look at Dixie. Dixie headed up finally on the daily here to our upper second standard deviation. Again, did give a nice try up there on Monday when we last spoke. And now it's actually headed for this overhead resistance at 103.57. That's these wicks over here. And coinciding with these lows, there's multiple lows. So this is a big area. If it can recover here, I would still be looking for a possible deviation of this high, but I would be looking further up. So 104 to 104.50 at this high side structure on the daily for Dixie here. And we can just kind of, I'll just mark this, because if it does take out 104.69, nice, then we're probably looking at a much more sustained move to the upside for Dixie. But the daily still upside angled. I don't remember which time frame this was on. Was this the weekly? Yes, this is the weekly. So that's still within a weekly consolidation structure. 103.24 would be the pivot. Can we get the projected pivot from the fancy dancy paid indicator over here? Let's take a look. Currency and bonds, Dixie daily. So the one that I have on this chart, this Stoke is free. It's the BA reverse Stoke cross by Trader Hali. You can get this for free. It's got the Stoke pivot on it. You can customize it however you want. But then there's a paid version from KVDB over there at Crown's Crypto Cave, or I'm sorry, it's app.crowntrading.net. And you can pick this up. I've had this for a while since they launched it, I believe. It's got a bunch of extra stuff like a projection. This is also calling out 103.23, so it's a penny less. This looks like continuation, depending on where Dixie closes today. It will close a little bit later than traditional market close. So green DMI, we do not see strengthening ADX. I mean, it is, but it's downtrending, strengthening ADX coming from pretty critical read. I don't think this reads that like that, though, does it? No, not really. But, it looks like continuation to test a little bit higher. We'll see where it starts to reverse from. The dailies on Dixie don't tend to close outside of the upper seconds a lot, but it can grind. It can grind up or down the upper and lower seconds. We did get closures on the way down that did accelerate the drop right into a deviation of the support here. Retest, reclaim, and up. Nice little base of support here on the wicks at 101.50 or so. Regain that upper first and then grind that upper second area at this high. So it is looking like it's going to head towards this high and then test the next high above it. Be aware that this is also a bit of a reclaim of this low structure here. So if we do see this low and this high taken out on a close, that'd be this low where the rejection came in. That'd be a reclaim. Then we're definitely looking in that deeper 104.50 area to that 104.69, maybe even a swing of 105 over here at the next big area. So keep an eye on it. Let's go ahead and now take a look at gold. I'm sure gold has headed to the areas that we've talked about previously, and it has. It dropped that 10. Let's go over to the other chart because I think I had some of this marked up. Give me just a moment here. Let's go over to gold daily. I guess I didn't have this marked up. Drop in the low here on a daily close. It's in a critical region, but that does mean that has it dropped the low? Yes, it's dropping the low now, which does mean that it's oscillating around the low wick. If it does drop this area, I would expect it to grind down further, try to deviate and head back in. But, there is some support here at 1890. But the real big area, it's like 1880 to 1890. And then we're looking at low side structures that coincide with those high side structures on a close at 1870. So basically where the lower third standard deviation currently is, likely what we'll see coming up next around 1860 to 1870, with potential for deviation set if it does close below at around 1880 to 1890. If it can, just swing the low and recover the upper first. I would say first off, it needs to recover today's wick high. That's at 1907. Below there, not much doing. The lower first is currently at 1913. I do suspect this is going to be somewhere around where a 3-candle low potentially could come in at 1906, 1907. So that's where I'd keep an eye on it to the upside, only if it can just swing this low over here and then recover. Now, what is the likelihood of that on this? 1893, 94, which would be basically closures above 1894. The momentum pivots right on top of price right now. So it's just going to chase. It's just a matter of where do things bounce from. 4-hour is looking like expansion and continuation, or at least the etchings of expansion continuation here. So closing below the lower second at 1895 would do it. That would likely send things down, or to at least retest this 1890 to 1893 area a couple more times, see if it gets under and then starts to bounce from there. But this is a fresh cross down. High just put in, starting to lose the low. 1898 to 1900 as the pivot here. It is in a critical region. It likes to bounce out of the lower second, lower third area. So I just keep a close eye on it. Close today, open tomorrow. So that's going to be my take on this. And then, of course, we're going to revisit these and take a look at some of the higher term time frames when they close on Friday or coming into the close on Friday. So that is pretty much it. So we've covered Bitcoin, traditional markets, Dixie, and gold for today. Yeah, I'm not seeing too much else that I'd want to cover regarding that. So we'll call that kind of the bulk of the analysis portion of, dedicated analysis portion done. And I will go ahead and take a look at chat now. So for those of you watching this after the fact, thank you for joining me. For those of you who are still here, if you have questions, go ahead and put them in the chat. And I will try to take a look here and see if I can answer those questions. So let me go ahead and kick the music back on. Let's go over here. Yep. So let's go ahead and do, I guess, this one. And turn the music up a little bit. All right. So let me go ahead and read the chat here, and we will take a look at what's going on the charts. All right. So for you guys I'm going to look over in YouTube first. Let's see here. All right, so hello, Jedi, Dr. Pepper, No Name, Ivan, hello, Cheryl, how you doing? Spin, hello. All right, so missed the dip or closed along or something. Okay, Cheryl, hello. Bollinger Bands are tightening. Very much so, and will continue to tighten depending on, especially if Bitcoin closes here. Can a major low be set on low volume? Yes. Macro low like a quarterly. Oh, it's all relative. Where was the last higher volume? It's all relative to the last highest volume low that was set, right? So we're taking, Bitcoin into account here, and we go to the, this is the index, I believe. Yep. So we've got the quarterly, and we turn on volume or not. You don't necessarily have to turn on volume. We'll just not do that, and we'll go use this chart apparently. We'll go to the quarterly, for instance, on the index, and we can turn on volume. Oh, this is from something else. This was Bollinger Band compression stuff. Go to log. And volume. So this is what you're referring to. It's like, oh, this low, it was lower volume than what? Well, it was lower volume than the higher low from the previous low, but it's still a higher low. So it wouldn't be until this last highest volume low was dropped would that not be a viable area. Or if it gets retested, this quarterly candle gets retested and closed below, then that wasn't the low. But for instance, when using, we'll just go back to the 15-minute here, and when using swing fail patterns, you know, the low here was a high volume. This was the highest volume we've seen in a little while since you know, the actual lows down here. So closing below it didn't solidify this as the low, though. It swung the lows and set a bit more higher volume, but lower volume than this area over here. But the reclaim should hold up then. In theory, we have a lower low, need to break out above the highs, and then this would be a confirmed low on longer term time frames, right? So keep closing below it, and it's not the low. But it doesn't, you know, the highest volume area didn't set the low. That set the swing fail area. It swung it and then tapped liquidity below it, but that didn't, it set a higher volume area of interest down here, but it was lower volume than the previous the previous low wick. And on the quarterly, for instance, Bitcoin, when looking at the quarterly here, the low is in. I mean, this is a low, so it's just a major low. You know, closing back above the close opens and the wick makes a 3 candle low. Now, realistically, you want to see the open of the April 2022 candle open taken out on a closing basis, both the open and probably the wick high there, and that's at 47,500. It was 48k on those dailies that came in just above it, that 48,222, but 47,500 would be the closure that you'd want to see on the quarterly for continuation to the highs and higher, right? Because then, just from a candle structure perspective, you know, we've closed above this wick high, and we come and tested these wick lows. So the next, you know, and this close open here at that, you know, 28,930k area on the quarterly. So that's kind of where Bitcoin's been trading at, is this close open over here. Next big area is going to be $35,000, then 45.5. Above there, then it opens up the next big areas, which is, you know, the close here at 46,200 or so, and then close at the big close here on the highs at 58.8, and then the wicks above at you know, 68, 69,000. So only gonna do one, so I'll do Sol for you, because that seems to be one that you've been trading a lot, Cheryl. But yeah, I can look at an alt real quick here. It is going to be a little bit of a quicker stream today. If we have time, I'll take a look at H-bar. But let's see. So I've got some other questions, traditional market questions, and then I'll take a look at Sol. So I was just asked about SPY, weekly, bear divs. So let's go ahead and take a look. So SPY on the weekly, is there bearish divergence? No. No, because this particular area needs to create bearish divergence. So not yet. Is there longer term bearish divergence? Absolutely. From like way back here, we don't have any off the current high side structure. So, and it's in trend bearish divergence is what you want to see. So SPY on the weekly, you want to see in trend, right? Those are the most powerful. You can get continuation drives and like all that stuff, but you might be referring to this high over here that it closed above. Let's mark it. Maybe there is, but I'm not seeing it. Yeah, no, you're right. No, you're not. It's a lower low on RSI, higher high on RSI, and close. So no bearish divergence. I mean, the 455 Stoke turn is what you really should be paying attention to. Again, you know, like until we see a big breakdown, this is a big mean reversion play on the weekly, and you know the daily has the opportunity to hunt liquidity lower and turn soon if it wants to. You know, it can also hang out down here for a long time, you know, below the 440, 441, 442. I would say 440 to 442 area, but it's right on the edge where, you know, anything could turn it back up. Meeting minutes for FOMC. No, I haven't seen much that anybody's really talking about. We might hear something a little bit later today, but maybe some insiders got information and they're a little bit more bearish on it. But realistically, we're looking to the next big September meeting. So that would be their actual meeting, not just their politicking and fluffing of numbers. So okay, so let me get this set up real quick and we'll go take a look at, did the stream just restart? That was weird. Yeah, everything blinked on me. Nope. Not a lot of volume of Sol. Right, so let me go ahead and take a look at Sol for you. And are you referring to like you're not trading with a lot of volume, or there's not a lot of volume coming in on Sol? It's just hanging out in areas that we talked about. It's probably more lower term time frame that you're looking at. This is a consolidation. If it loses the low, 22.33, it's going to hunt lower. 21 bucks, 21 and a half. If it loses that, then we step it down to 20 to I would say upper 18 area to 20 area. But as it stands right now, bouncing off the lower first, not a big deal. It did get a bearish cross to the downside, but it is in a consolidation structure currently. So unless it drops the lows, I'm not really looking at this as anything too crazy. And I'm going to use Coinbase Spot because that is going to show me a little bit more, a little bit better representation of the spot chart, in my opinion. I mean, volume's dying off. It's got a pretty good low set, but people got to be interested in Sol and the projects there, not just in the trade. And it seems as though people are just interested in the trade currently for Sol, which is volume dying off. This was continuation. So you see the higher volume area, 23.20 would bounce it back to the upside. Currently trading at 23.68. So could try to set a low. This higher volume candle breakdown was the easy play from the 4-hour perspective. So let's go ahead and mark that. And that just so happens to come in at, or no, I'm sorry, it's trading at 23.40. and it needs to get above 2368, 2371, which is that wick low on a reclaim. We are seeing a bit of higher volume come in on the current 4-hour candle. Let's look at that. Lines up with the hourly. It's probably setting up to range a little bit here, but if it can reclaim the 2368 low, that'd be above the upper first. I'd be looking for it to try for wherever the upper second standard deviation is. It's not looking too good for it right this moment, as the basis band is coming in at 2345. That there is a rejection off the low side structure over here, just below that upper first. So this would, this can bounce all the way back to the upper first and maintain trend to the downside. This is still lower highs and lower lows. So it's got to hold that lower first to lower second area and not lose its current wick lows at 2287. And it can try to W its way back to that overhead resistance, see if it can reclaim. That's pretty much it. Got about 10 more minutes. I'll do. Hope that helps, Cheryl. I'll look at H bar. Spin wants me to look at that Comey. No problem, Cheryl. I'll look at H bar. I do have a little bit more time than I thought, so we'll take one. We can take more than one. So H bar and Comey. Let's go take a look at H bar. I think it was probably due for a pretty gnarly pullback, and well, there it is. Yeah. So it hit some of the areas that we'd previously spoken about last time that we looked after a really nice run up. Yeah, that's high volume. That's like the highest volume. This is on Binance. I would rather look at this on a spot chart. It's supposed to be their spot chart, but I don't care about their spot chart. So let's go ahead and, unless you want me to look at Binance, because that's where you're trading it. I kind of want to see it on, yeah, so we're seeing the same look. High volume low. That's a really high volume low on the daily for H bar. Was that coming in on a low? That was on a breakout. And then it, of course, started closing above, came back, retested around that candle low. So let me just do it up right here. So on the daily, that wick low to the closing low here, around 4.5 cents. Came back and retested the high side of the structure there. So we pretty much got a zone here that it retested between 4.4 cents and 4.65 cents. Tested into it and then just rocket shipped. And now we're seeing a pretty relatively high volume rejection on the daily, headed down below 6.33 cents, trading at 6.39. It could try to turn back up. It spiked right into the high area that we talked about, up here at this high, and this would be the next highest volume high up here. So we can take the wick above it just to give us a cleaner zone at around 7.7 cents. So 6.98 cents to 7.7 cents. Got pretty much a rejection straight off that 6.98 cents, almost 7 cent region in today's doji. Off higher volume, I do suspect this is probably going to try lower when looking at rejection at the upper first. Tried to reach for that secondary high up there. Came down below the basis band, reject the basis band. It needs to find support here. This is, a little bit of a change of structure. So what you want to see is a consolidation that does not lose this high over here on a close at 6.24 cents or so to its current wick lows at 6.12 cents. If it does lose that, it's likely to start closing below that lower first at around 6 cents. If it does not hold that area, that's kind of its line in the sand for the 4 hour, yeah, then it's a move down to the next set of highs basically at 5.911. Yeah, there's a low side structure over here at 5.8. So yeah, and then then we're looking lower second standard deviation back to these the high side of these lows and the low side of these lows. So that'd be back to 5.7 to 5.5 basically. Below there, it's going to test 5.45, and that's around a consolidation structure. So unless it lost that area, you're looking significantly lower. Right now, it's might try to set up for a bounce. Nice high volume on spot for Coinbase too. 6.97 cents is going to be the 4 hour pivot. So it might hang on the lows here. If it can make it back above the basis at 6.5 cents or so, then I'd look for it to try to test the close open of the 4 hour here, where this guy's coming in at around 6.7 up to the wick there at 6.9 to 6.98 or so at that high. If it can reclaim that area, I'd be looking for it to run its local highs again. Hope that helps on H bar. And then Ecomi. You've been in this market a little while. Wow, I can't talk. A little while there, Spin, huh? Because if you're looking at Ecomi, you've been around a little bit. Are you looking at? Do I have the right one, Spin? The OKX chart or the Gate.io, or am I looking for a different ticker symbol? It is OMI, right? You're gonna have to let me know. So I'll give you a second to catch up. I want to say that isn't it OMI? I've charted this thing a bunch, and yeah, is this the one? OKX. Oh my god, that's right. Yes, I've charted this many times. You guys have probably seen Bobby in here. This is the roller coaster of despair. You get up the roller coaster and then you just ride it all the way down. Yeah, okay. So yeah, this is the roller coaster of despair, and for any holders back here, good luck. This hasn't even started a weekly like major low. I mean, it's got to close above this wick high on the weekly. So it's got a zone that it's got to reclaim, and if it doesn't do it, it's probably more sadness. Closing above the upper second, it's okay. It wicked up into the range above on the weekly, and that's right, I don't know how to read these numbers because they are so tiny. A reclaim of the highest volume wick low on OKX is okay. That's the upper second standard deviation as it stands, and that's 0.0007 cents. Of course, it's 0.000769. Nice. A reclaim of that area, positive, I guess, but also a swing of that area, high volume rejection almost equals the last high volume rejection. Ugh, this is ugly, dude. Yeah, it did reclaim this consolidation before this dump off right here. It's got to hold it as support at 00763, or at minimum its last high, or it's kind of over for a little while. I would say, the way it moves, 000751, so I'll just call it 751, at that wick high to this awkward open that was a gap up open at 711. Above there is fine. You can even take back down below the basis at this wick low, which is coming in at 661. Above there, it's maintaining trend. Below there, it's nuked. Goodbye. Probably lower lows. Runs right back the other way. You could also just take above the upper first at 741 currently. It's going to update most likely to the 7.5 to 7.63 resistance reclaim. You need to see it back tested. This looks like a high is being painted right here. Daily supports, it's 840. It's at 813. So daily's going to turn back down. 12 hour already turning down 857. So it's a meaner version. Probably back to support to test this supportish area at 763 down to the basis here at 717 for the 12 hour. Just watch it doesn't drop that wick low at 661, because this is just straight up rejection right here. Your higher volume green red, equal volume I should say, on the exchange here. So probably headed down some more. Yeah, I mean, this is like I said earlier, it's the roller coaster of despair. Nice breakout volume, rejection, continuation past the high, so it deviates the overhead resistance and then right back in. So it needs to find support in this area. 4 hour, you could give it room, probably to some areas that I just talked about. 731. That's likely where the lower first updates to here in about 1 minute. Nice buyback off the basis. That is what you want to see. A little bit of a higher low, lower low trying to be painted here. I'm sorry. Higher low, lower high if it does close below this last low that it tried to set, which was at 804. So other than that, if it can take out the little high that it just put in here at 855, that's also above the resistance, and it's probably going to run the highs again. It's current highs. Yeah. Yes, sir. Yes, Jedi. Ikomi is that's one that Bobby had brought up to me as well prior. So we've been tracking this for a little while. Yeah, he brought this up last year. This was a big M for make us money. Goodbye. We took your liquidity. It's an M to a big L. Market losses. This is probably going to stay down here for a very, very, very long time. We might see pops of this thing that just kind of run and then just get immediately rejected. I don't remember what this does, but it's going to be tough for this thing to come back, as it is. It's a long way off, man. That's just out of curiosity, because we're on a log chart, so these moves look small, but they're freaking massive. They moved the measuring tools around, and now I'm all confused. Price range. Let's see, what was this move up? Was a cool 265% off of listing, and then it went down a cool 87. Well, obviously 100% from there, but it's about 93% drop. And what are we looking at? 88%. I mean, this move is not insignificant off the low here, but it's rejecting where you would expect it to reject, right at the low side structure here. I'm curious. Take another minute here. Nice 72% up. But when you get gnarly wicks like this, it's just, man, if you're trading with any kind of leverage, you're probably screwed. I mean, on this wick alone, in the daily. Let's take a look. Just measure the wick, right? So on the wick alone, it's 11%. Like from that wick there at the high to the wick low today is 18%. I mean, it's good volatility if you're into gambling. But yeah, this is definitely what I would call a roller coaster of despair. Who knows? Maybe it'll turn it all around. It'll become the next hot thing. Economy to a penny. We'll all be billionaires. All right, guys. I think that's going to be it if you don't have any other questions. Yeah. So you guys, yeah, Jimmy, did they have any others? Oh, they can't even get into that chat. Oh, jeez. Well, why? Are they now getting rejected by the firewall, the internal firewall? Okay. All right, I'll just link up with you later then, Jim. Yeah, I know. That's why you were asking that one question. You have privilege. You got the privilege to ask the question because you're the only one that can chat in there. You jerk. All right. Yeah. Okay. So that is going to do it for today then. I want to thank you all for joining me today. If you do have any questions, especially about things like this example that I illustrated a little bit earlier with swing fail patterns, again, it's been an ongoing conversation, but I do hope that you guys are beginning to understand this if you didn't already, and or if you did, that you're gaining a little bit of perspective and reinforcement of that learning. So I want to thank you for hanging out with me today. I will be back on Friday with a live stream. Of course, later today, I'll be back with a Bitcoin in 60 seconds video. And yeah, that's going to do it for me today. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. Please, don't go high leverage. We're about ready to see some volatile moves. Don't get wiped out before the actual move. So please trade safe. And of course, as always, it's a crazy world out there, so please stay safe. And I will talk to you very soon. With all of that said, Landy out.